Hello, welcome to Orb Plus. Today, we attempt to take a trade in a market with a folder that has a folder. It has an orange one that says Philly Fed Manufacturing Index. It hits at 830. We're intrigued as to what that's probably going to do. We see it going down at the moment. If the actual is greater forecast, it is good for currency, which means if it is green, we should see price move higher. If it's red, we should see price move lower. That's how that works. Outside of that, we are looking so patiently looking. First off, we're looking for daily bias on this one. Before we get to bias on that, we're looking for everything and anything, anything and everything. I think it's smart of us. I think it's smart of me specifically to take change in measurements and strive in patiently change in moderation. There we go. Because I feel as though when I saw that video, the video, realistically speaking, regarding liquidity from TJR, it threw us for a loop Tuesday. Because we went to take the trade almost immediately after looking at that video, and I gotta say, it threw me off massively. Because up until that point, I had been trading assuming New York Stock Exchange opens at 8 a.m. Not 9:30, but 8 a.m. Right? Totally wrong. Totally. So my thought process was, okay, because I know if I were to put that on the chart, absolute loss in ability to identify trade. And sure enough, I think we took a trade Tuesday. Did we lose Tuesday? Hang on, let me see. LT story, wait. So this, I believe, was Tuesday. We lost Tuesday's trade. I think we got stopped out. We won. I think this is Monday's trade. Both of these were Monday's trades. No. It was Tuesday. Tuesday was the 17th. It doesn't look like we took a trade Tuesday. 16th? Nope. We haven't taken a trade this week. What the heck? 10. We didn't take. That was last Tuesday. Huh? Hi, Doug. Thumb's a bit busted here. I'm gonna go find out. Wednesday was FOMC. Couldn't do that. We had double red folder Tuesday on the 17th. And then Monday on the 16th, we had one orange folder. We took a trade Monday. No, we did. Or at least we tried to take a trade Monday. Did we take a trade Tuesday? But no, because the last time I recorded, it was Tuesday. We did not take a trade Tuesday because our confluences did not appear. I remember sitting here going, okay, if I can't get a reaction off of my bias, off of my confluences, it ain't happening. I'm not even going to try it. We didn't take a trade Tuesday. Did we take a trade Monday? I think we messed up Monday. I think we did not take a trade Monday. I mean, if we did, it would be presently visible. So 10-9. This was last Monday and Tuesday. There's nothing after that, so yeah. 10 buy sell. We lost that last trade, but we won twice on both of those. Not too bad. We lost the past 3. Big old meh. That's currently what we've got going on for ourselves, though. That's essentially it. And I guess it was a combination of not being able to identify stuff because it had thrown me for a loop. The idea that us changing the time to the correct time would be beneficial, right? It was in the sense that we now know when New York Stock Exchange actually opens. But it wasn't in the sense of we've been using 8 a.m. for our biases forever. And we've won quite a few trades. We have won trades using simply 8 a.m. to determine where price is going to want to go. Our failure and my biggest issue was not knowing where market wanted to go through the use of daily bias. To identify daily bias is cool, but to determine where price would want to go after a key level was hit, and I do mean a valid key level, not just, ooh, it went up, guess what, it's going to go back down. No. This right here is a fair value gap. And this right here is an order block, and price might actually want to continue lower. I mean on that level of confluence, not just guessing, oh, it's going to go down because retrace, right? Asian, London, pre, and then New York stock here. So now we're going to be looking for stuff. We're going to be looking for it. This is why it looks weird, because that was the 5 minute. We're on the hour now. This is Tuesday. No, this is Wednesday, sorry. Because that was, sorry. Thursday's trades, right? We had holiday, so price didn't do anything for us. It dropped, but it didn't do anything for us. Thursday. Wednesday, we had this mess right here. We didn't take a trade. We didn't touch Wednesday because of FOMC. Here's Tuesday. I remember setting up for this. We actually, we attempted to take a trade. We set up everything along this perfectly. Noticed it was consolidating and waited for something to happen. And it didn't give it to us. It hit 10:30 and we had been consolidating. It did not move. It didn't do jack. Everything up to this point led us nowhere. It didn't say price was going to go lower. It didn't say it was going to go higher. I think the bias was that it was going to go higher. We would have been stopped out had we tried to take a trade Tuesday. Monday, I can't remember what I did Monday. Because this looks like it's a good trade. Maybe, if I had to guess, we saw all of this, and by the time our confluences were hit, the move had already happened, and it wasn't worth trading anymore. Because this is way later in the day, and Monday's stream day, so because it's by 10:30 that I leave, so right up in this, between these two candles here, one giant leg up and price continued higher. I imagine if I had tried to take a trade that day, I would have been wrong. I'd have consolidated and I'd have been stopped out because this rally gap was misleading and we didn't take a trade. So, no biggie, no problem. We saved our skin a little, just a smidge. I do want to get into getting more trades on the thing though. Because for the whole 3-month thing, right? I want to actually succeed at that so I can start using my actual capital and getting a profit and actually earning something from this. I would like to. Okay. Daily bias. It looks like we're in an uptrend, don't it? Don't it? Realistically speaking, we have a breakage here, right? Because price stops here and then opens up lower, continues higher, and it shifts to this. If we were to talk about these candles here, because this is the last true candle we had before this break, technically speaking, we would have had a break of structure of this uptrend. We'd be looking for a down mode. Technically, price wanted to do that and wanted to continue down. But because of this break here, I'm inclined to believe price might actually continue higher. The only reason I have for that is because it broke in such a way that price wants to go lower. It looks like it wants to go lower. It's like a fool. It's a marker for the fools, I guess. I don't know how else to explain that aside from this is a juke. Say it the way it is. The way I think it is. This says, okay, we know people are going to be thinking downtrend right here. And this is to fake out all those thinking it's going to continue lower, when in actuality, if we were to move this up even a little, this would be above this high, meaning we had a break of structure out of this downtrend. So at this point, we'd be looking for price to what? Continue higher, right? Sure. Price can continue on a retrace. And even on this down candle, like from this candle this way, it's solid. From this candle this way, it's not. It's just this candle right here. You can move all four of these up from this candle to match where this closed on the red in order to really depict where prices want to go. And based on these three candles specifically, price is not going down. Yes, it's going down. The general direction is down. Look at that. It went down. But structurally speaking, right, this candle has not closed below that low. So it's not going down. And per this break of structure here, technically speaking, this is a retrace. It's going down temporarily to go higher. Per the retrace. And this didn't happen just once. It happened twice not this week, but twice in the past couple of weeks. We had this one here happen. We had this one here happen. We had this one here happen. We had that one right there happen. Except that was in the opposite direction. Very tempted to see what would happen now. We have fair value gap all the way through here. It's being respected. It's just continuing higher. And then, oh, I forget to mention. I forgot. I'm sorry. I should have mentioned it. The strategy we use for the lowest wick of the top candle and the top wick of the bottom candle, right? I feel like that is a solid strat to use in the event we can't identify any other key level, right? The use of it is depicted in a trend line where you can obviously tell we're in a downtrend, or you can obviously tell we're in an uptrend. And per the entirety of the day, you can see the top candle marked as a zone and the bottom candle marked as a zone. And from it, either it's respected up high, in which case we'd be looking for shorts, or it's respected down low, in which case we'd be looking for longs. At that point, it's the reaction that would be going off for, right? Because price went down, respected the zone, and then it continued higher. Not saying that it's a 100% guarantee you're going to win every single trade you take, but it is a easy mode way of identifying a key level you wouldn't otherwise think to consider. And I'd like to use it as confluence instead of only using liquidity sweeps. Sure, liquidity sweeps are the more likely of those strategies to be profitable, but in the same aspect, because it's a range that's got to be respected, it's got some leeway over liquidity sweeps in the event it doesn't readily present itself. And so I'm more inclined to use it when a liquidity sweep just is unidentifiable. All right. I'm not seeing any fair value after this. We have a breaker structure here. Price says it wants to go higher. Okay. Same story here. Price wants to go higher. We kind of want this right here to close above that, so we can continue that way. This is, what was that? That was the hourly. And that was the hourly on NASDAQ and S&P. And for this here, here's our daily. Breaker structure there. Same price wants to go lower. If price does it. No, because the move is already down, so it's common targeted these two. It's destroyed this. I think what's going to happen is price is going to go higher. I think it is. Let's go to the hour. This right here is how best it would be used. I would like to do this. So from this down all the way, the bottom candle right here, we'd start from the bottom, mark a zone of the entirety of this, the wick, right? And then as we're going up, the highest candle here, you can mark another zone here from this body on down to the wick itself. Boom. The bias is found in trend. So in the event this right here is hit, and it's to be treated like a fair value gap, right? It'll come on down in here, wick inside of, and continue higher. Cool. Our goal at that point would be to find a long, get the profit off of reaction, and then from this right here, if this zone is respected, it will continue lower, and if it's continuing lower, this will mean we're looking for shorts, get the profit from the reaction off of this. We'd be looking for shorts. However, if this zone specifically is disrespected, which means just like a fair value gap, it's closed above, chances are it's going to continue higher in price. At that point, we're looking for every confluence saying continuation. That price is going higher. And as it continues higher, that's what we're going to be looking for. However, the idea then, and I'm doing this in the same aspect I see fair value gaps being disrespected, price continue higher, and then it comes back down, goes within range. I am doing this based on the interaction of the range itself, right? So if price continues higher for a small amount of time and continues, and then from that continues, falls lower back into the range. If it falls into the range, I'm looking for it to be respected on that down move. When it's respected on that down move, and we see price continuing higher, and we get a confirmed closure above again, that'll be a second confluence that price does in fact want to continue higher. And only at that point will I be considering to take a trade, knowing I am confident in price moving higher. We want it to continue higher. That is the goal. If it's disrespected on the move down, that is where the trade idea changes for the duration of the video. And it will only ever change one time. And if it changes in such a way to where it consolidates, kind of like it's doing right now, all the way through this, and then wherever the flip Tuesday is, where is it? I think it was this right here. No, 17th Wednesday. So I think it's this right here. 16. This whole block right here, where it just sat there and consolidated. Yeah, that would hurt to look at. So we're looking for a defined closure above or below to determine where price wants to go. That's what we're doing right now. That's what we're waiting on. Honestly, that is the best bias I think I can use at the moment. Because I'm not seeing a fair value gap outside of this right here. And this is the break of there's a massive leap of data that's just not there. And it's not, I don't want to recognize this at all. This is terrible to look at. It throws me off every time I see it. I'm frankly just not going to pay attention to. And if it's something I have to pay attention to, and you're experienced enough to know how to explain this to me in terms of what you do is click this button and this disappears, or more accurately explain to me what the heck this is, so when I go from here forward, it's not a matter of, okay, I can disregard from this candle this way, but from this candle this way, this happens, and so your key levels ought to change just a little bit, or how your strategy works ought to change just a little bit, so that way, from this point this way, it's a clear read instead of me guessing twice. Because the whole point of this job is to guess whether or not price is going to go higher or lower based on stuff that is presented. This being presented throws me off completely. I don't know what this is, why it happens, or what I should do in the event it presents itself. So, that. Looks like we might actually get a disrespected zone up there. We have a... It's currently up above it. We have 26 minutes for that to close. It's currently 7:30. Currently. So we're on the same page. We're going to do the same thing over here. Good there. Good there. Good. Good, 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 good. 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 And this is on a 10-minute delay, so we're not going to see data on this super quick. This is just a better depiction on chart work and what it's doing. So that way, if you're interested in working with this, you know how to do that. Aside from that, I like using chart work on both to really dial in stuff. I find it easier to do it twice and know what things are going to do based on seeing it twice over once and thinking, oh, this is probably going to do this, or this, or this, and it just fall apart because you're only able to look at it one time. This is my way of double checking and re-verifying everything, so that way the end result is I can have a successful trade day, and it's not totally just me guessing at a single chart. Granted, they are the same chart. So, right now, I'm looking at price continuing higher. My bias is that I'm looking for a long. I'm looking for price to continue higher. I'm looking to buy into a position. At this very moment. Per this closure, I do want to see if it does continue. If so, yay. If not, that's okay. Trade idea changed. No problem. However, I still feel as though the rules should stay the same. Don't trade until after pre-market open. Or not just pre-market open, but after a move has been guaranteed, completed, and then reversed after market open. It's 7:30. Instead of waiting and waiting and waiting and you just being able to see this, being a long time of silence, I'm going to close up. I'm not going to close up. I'm going to pause the video because we've been recording for almost 30 minutes now. I'm going to let the chart do its thing. I'll be right back. Okay? Okay. Alrighty. It is now 8 a.m. It is now pre-market open. As you can see, we had a huge move here. Disrespect of this zone here. The thought process at the moment is that price is going to move higher. I wanted to really dial in how valid I can make this strategy specifically work. And so what I did was, due to this disrespect, we had a new high within London session before pre-market for New York open. So I took the respect of this high and the range of the candle, and I said, okay, here's what's going to happen. This can be disrespected because we have two key levels. We have this fair value gap here that's got to be respected, and then we have this level here that's got to be disrespected. Here's the thought. If this fair value gap can stay respected, right, and we see price above this, we'll have a confirmed, without shadow of a doubt, price continuing higher here, right? Does that make sense? Because the general idea is, if this is respected, then we should be looking for a short that price is going to move lower. But because it's based on the reaction, right, we need to see within pre-market that this fair range here, if this is disrespected, then yes, this fair value gap is valid and price is going to continue higher. That's currently what I think. That's currently my bias. That's what I'm working with. We do have a fair value gap here. We have not broke structure. We do not have an inverse fair value gap at all on the 5 minutes specifically. We've been looking for a fair value gap. We're not getting that or a break of structure. So I am at the moment waiting for either price to continue lower, breaking structure here, or I'm looking for price to continue higher and give us something else. Because on the 5 minute, we're supposed to be looking for break of structure, inverse fair value gap, or an SMT divergence, but not on 4x. And for us to really get that dialed in, we would need this right here to occur. Our SMT divergence would happen somewhere within these candles. We just need to wait for it. Because right now, everything's saying down. This right here lines up with this. We're looking for either this to continue lower or this candle right here to go higher and give us a different pattern to what we see here. I think we'll see an SMT divergence before we see a break of structure. And we will definitely be seeing a break of structure before we see a inverse value gap at this point in time. I'd pause this set of the video, except we have a confluence set up. We have things set up, and I don't want to miss out on the correction or validation of this being a solid strat to use. It is going higher. So far, it's lined up the same. Both the charts are in sync. Looks like we're about to get a break of structure. So far, that lines up at the moment. No S&T divergence yet. It's the exact same. No change. No break of structure yet either. So good. We got to remember that on news on 8:30, news hits. It's a single orange folder, not super high impact, but it can have an influence on the market. Hello. S&P divergent threat there. NASDAQ says price is going lower based on this right here. And the S&P doesn't know. The S&P is lagging index. At least right now. We have 5 seconds for that to close. In the event this zone is disrespected, that would mean NASDAQ's the lagging one. Which that is kind of right now the hope, is that the zone that we're currently in gets disrespected to the upside, so that way we go for trading, we can get a solid gist on a long instead of a short, which was the original bias. Was we're looking for it to go higher. Sorry. It was the original bias was for it to go lower because of the larger time frame saying that it would go lower. But if we can get price to break past this zone and continue, that's enough confluence for me to work with it and wait for it to continue higher. However, if it's respected and we get news and it breaks past and below, we get a well-defined break of structure, that's going to be confluence number one, primarily because it has worked before, and that is exactly what we're looking for on this chart. That would also fit in with the strategy I'm using right now for the two zones, because on that break of structure, we'll have a closure below the zone, resulting in it being respected, which means the trade idea has now been flipped to the opposite side. We're looking for a short instead of a long, which would fit in with our daily bias. need to shave my beard. Just a smidge. It's getting long enough to start irritating my skin. So far, the same outside of that one. Again, we want to see it break structure. If it breaks structure, yeah. If not, it'll break past the up, and if it does, it'll continue higher. Hello. Expected. Oh, what you doing? Let's go. Hello, S&T divergence. This is saying lower, whereas the Nasdaq is saying higher. Is this the S&T that we're looking for, that we've needed? Regardless, we're looking for that is a well-defined S&T divergence actually. Um, one of them's lagging behind. Which one is it? I imagine the S&P at this point, because the Nasdaq is not going higher, but it has said prices moving higher, and that is a well-defined one right there. And the low side, the resistance side, is actually conforming with itself. It's just the top side, the same price is going to go lower. I want to see a break of structure. Before I get too comfy, I want to see a break of structure. I also kind of want to see what news has in store. I think this is a good strat. I haven't made anything yet off of it, but it's a good key level reference. Keeps me on track and within my realm of reason. Within a realm of reason. Not mine, but a reason. Hello. Okay. Price has gone lower. It says higher. And I think that is also, yeah, this right here is conformed with itself. This actually makes sense on both charts. It's between this wick and this wick that things are lopsided, because this one right here is higher on the Nasdaq than this one is. We are still respecting this zone specifically. And we are 5 minutes out from news. We'll see here in the next couple of candles whether or not price wants to continue higher or lower. No break of structure yet, but that is very close on the Nasdaq. We haven't broke structure. We have not broke structure yet. Right now we are in an uptrend. on the hourly. I think it's best if we sit on this actually right here. Because this is our best representation of, okay, this is the thing. Up until this point right here, this zone was our key level. It was hit. It was disrespected. We see price continuing higher, which works in our opinion, in my opinion. But since this has moved up within London session, the high moves from here, and this range moves from here up to the highest candle, which is right here that's formed, and it starts from here down. And this high moves up to here, which means our new key level per this entire move is this whole thing right here. And it's being disrespected currently, which is what we want to happen, right? However, news is going to have a strong pull on what this candle does. So we're going to bounce back and forth between the 5-minute and the hour to best hone in exactly what it's going to do. We are a minute out from news being dropped. Let's go ahead and cue that up, see what it looks like. Closed. Let's go ahead and see. Pending, pending, pending. We have 5 minutes for that count to close. News is currently occurring. We'll see what it does here in a second. This whole thing has been respected up to this point, by the way. So, moment of truth. We either disrespect it on news or we respect it on news and watch it consolidate back on down. Pause the video, let it do its thing. I'll be right back. Okay, so according to news, it is lower. The forecast was lower, or the current's lower than forecast. I forget. Yeah, current's lower than forecast, so that's good for currency. We should see price move in a direction. Typically, it would have been in the down direction, but because it's orange and not that high of impact, the motion is still in the up pattern. So that's the thing. There we go. In a minute, we're going to have a disrespected thing there. I want that candle to close. There's news. No. Movement. 2, 1. Disrespected zone. Gold. Price moves higher. What am I looking for now? Not a break of structure, not an inverse value gap. On the 5 minutes, we had our SMT divergence occur. We would have been moving on to breaker block, order block, or equilibrium, or fair value gap. We have a fair value gap that's saying price is going to move higher. So we go down to the 1 minute now. From here, we wait. We wait. Patiently. What are we waiting for? We're waiting for either an inverse fair value gap or a break of structure, so we can get price to the best option available. Press buy in on a long and watch price continue up from there. We'll do it for both charts just so we're on the same page too. And we'll go over all of what occurred on trading views. That way it's presented. So it looks like our break of structure is going to be a steep one. It'll come back down within range. Boom there. Break, and then we'll have it come up again. That wasn't a fair value. Was that a fair value gap on the 5 minute? Yeah, fair value gap on the 5 minute right there. Boom. Boom. And then on the 1 minute. Boom. Is that a break of structure there, though? No, it's not. We have a mini retrace within this. This right here is a break of structure on the 5 minute. Realistically speaking, it's within equilibrium still, so that actually works in our favor. Yeah, we want price to continue on that retrace. We want it to break structure, press buy, put our stop loss below not the most recent lows, but the ones below those. And then from that, watch it retrace back up higher. Because we have relative equal highs now across this entire move. This actually works in our favor, because if it creates that, we have a low we can work with, which means off of this high, we would need not a closure within the range here, but right here instead. So that's what we're going to wait on. We're on the minute right now. There has not been a fair value gap formed, so we are specifically waiting on the break of structure down low. Come on, give it to me. Give it to me. Give it to moi. Come on. Give it to moi. To moi. Give it to moi. Come on, come on, come on. Come on. Give it to moi. Sad. We still have a shot. We still have a chance of letting it come down, break, and then back up. Let's see if it's broke on the 5. It has not. We also have a fair value gap still that's present. So in this instance, I do believe it was the S&P that was lagging behind the NASDAQ, because NASDAQ said it was wanting to go higher, but the S&P said lower. And we got the result off of news that price was in fact going higher. So in this instance, the S&P was lagging behind, if I'm not mistaken. And in the event, it's unclear to me right now, because it kind of is. I could just rewind and see the S&P divergence as it appears and know which one's doing which. We know price went higher from the S&P. That's not the question. The question was, which chart had it correct and which one didn't? The one that didn't is the one that was lagging behind. Period. Hello, move. We are wanting to go in on a long. Break of structure is the closure of a candle below the most recent low in an uptrend. We have 14 seconds. And I'm not going to waste it on a candle that's not going to close below what I need it to. It's a good thing I didn't press buy when I thought I could have. I thought I would have. Come on. Give it to moi. Give. Good. That is where we're at. I'm going to edit this. Bring our stop loss below these lows here. Actually, I'm going to go further. I'm going to put it right here because this is trend line liquidity that could get swept, and I'm not comfortable with that. I like before this entire move up, this low right here specifically. If it comes down, it'll sweep these and then rally higher, but it won't close below that low there. If we get stopped out, it won't be... Oh, I forgot about those. Dang it. I forgot to set my zones, my key levels for take profit. Oof on my part. That actively hurts to look at. I see one there. Hello, 2. Hello, 3. I like the idea of going up to Dwyer. We're going to leave it right there. Fun form. Good. We're going to reset chart view. We're going to go here. Cool. We're on the hour. Let's go to the 5-minute. Let's actually go to the 1 minute because I don't want to be a dumb expositron thinking because it breaks structure on 5-minute. Or actually, I'd rather be the dumb expositron breaking structure on the 1 minute and going to the 5-minute and going, oh, it's actually still going higher, so I don't have to worry about it just yet. It hasn't broke structure on the 5, so I don't have to worry. I'd like to see it continue high into the clouds. Let's go ahead and press buy on this one here. This one here. Yes. Yes. This is not going to be as good of a trade simply because we are looking for this right here is my stop loss. Because this was the move that broke past this high. We created a new high, and then from that, we see it move higher. Good. Boom. That goes there. This is the hourly that we're on. I'm going to go ahead and put a take profit. Oh, to wait up to, is that the one? Is that the, did I go to the daily? I did not go to the daily. There's no way I went to the daily. No, this is the hourly. This is the move up. This is what broke it. This is right below that low. I don't want to manipulate that any more than I have to. What is this off of? Where's the hourly? This is the S&P. This is not NASDAQ, so it's going to be looking a bit different. Just a smidge. That's the entrance. That's a high from the 16th. Okay, yeah. Yeah, that works. Okay, sure. Let's set different setups for take profit. What in the world? NASDAQ looks madly different. Just all the way. What in the world is going on there, Chief? We have no other high outside of that to look forward to. This is a huge potential to hit all of that. I kind of want to go for that right there, because that is a well-defined sign of liquidity, if I do say so myself. Move this up here. That's going to give us a 1 to 2 risk to reward off of that right there. I'm confident that'll be a thing. Confident it will be, because we are moving up at the moment. At least per that move we are. I like this. I do like this setup. Let's go ahead and, because I'm also taking a trade on the S&P, let's go ahead and go back to this. Get you guys aligned so you're seeing the stop loss and the just there. We're going to go down to the 1 minute. So that way it is crisp and clear what exactly is happening. I am expecting price to continue down, but per this move right here, it says up. And we did break structure back to the upside from this up here. So, yeah, we're looking for that to occur, to shoot way higher. All right, with that being said, let's move on to TradingView. Let's go to Smith & Wesson. Why did I say Smith & Wesson? That makes no sense. I don't know why I said Smith & Wesson. The S&P 500, and let's discuss what happened. So, in London session, we saw this move up here, break past a high, as well as this zone here. Up until this candle, this zone was our key level for entry, for not entry, just entry, but to depict where price wanted to go for the day. From this being disrespected, we said, okay, price wants to continue up, no biggie, but we have a problem. It's in London session. So, from London session, we did not take this as a valid key level hit. What we did instead was we went to the 5 minute because there was no low to really work off of. We saw this high here being created, and it would be in London session. So what we did on Trade Locker was we set this high here, and we created a new zone, this one specifically here. And it looks just like this on Trade Locker. You can see it on your screen. I hope you can. Let me make certain. Yep, you can see it right here, and this is the new high. Pretty identical. So from this, what we did was we waited. We stopped, we looked, we listened, we did everything under the sun because we needed cross-reference the strategy that was this key level with the other strategy, which was waiting on the 5 minute for either a break of structure, an inverse fair value gap, or an S&T divergence. On the 5 minute, let's go ahead and go over here so we get to see the same thing we're seeing on that, because that is important. We got an S&T divergence instead of a break of structure or an inverse fair value gap. Where was it? Can you see what I see? Boom. From this wick down. And then from NASDAQ, it was relatively the same, except it was a little bit higher. Okay? This S&T divergence specifically, it looks like they were both wrong. Even if these two are wrong, this is, I think, more accurate. I think this wick went higher than this one. It was a close S&T divergence. Very, very close. Can you see it more clearly on this? I really hope we can. It was an S&T divergence that we were working off of. Yeah, right here. So it's not showing it on TradeView, but it's showing it on this. NASDAQ went higher here, unlike this wick here, and then if we go to the S&P 500, you see it moving lower. The S&P was lagging behind the NASDAQ. News dropped, broke past the high as well as this S&T divergence. We caught it just in time, thankfully. From the S&T divergence, we had fair value gap, which was our second confluence per our strategy, with a respected zone here saying price is going to definitely move higher. Disrespected zone, because there we go, we broke past it again on news. From that, we went to the 1 minute on this lovely chart here, waited for our break of structure to close below this low here, entered on the candle, and now we're watching price continue higher. That is what happened. How confident am I in it? I'm going to say 85% confident in this trade. Why 85? Because I forgot to set my take profits earlier in the game, and I had to make a rush quick job of it quite literally through all of this. So, yeah, it's a bit on the oof side when I did that. But, I am confident in this trade. I can confidently say that this trade, I did everything I could in to identify every key level up to the point with a bias that said we're moving lower. But I didn't marry it. Instead, I chose to wait for confirmation on a second bias that said the opposite. On this right here. Yay, we see price moving higher. This is what we want to happen. Yay. How did I start the day? How did I start? Was it worth starting the way I started? What exactly happened there? The idea is that price is going to move up to here. Cool. This is what we want to happen. Not that it will, but it's what we want to happen. Right now, what is happening? We have a low candle here. We have a high candle here. What I think is going to happen, what I want to happen is for price to come up to here and we can claim our take profit, which is gold. However, I'm looking at, guess what? Break of structure. How? We were in an uptrend here. We broke structure. This low closed with low. This low, that low. However, we're looking for the reaction, right? The retrace back up. The retrace is solid right now. We got the move, I think. This is per the day, not the week. We entered on the minute, hoping that the move would continue up higher. This is the general bias. Though we broke structure here, we're still in an uptrend. We're still in an uptrend. So, that being the case, we're going to be looking very, very carefully, very, very intrinsically for every single time frame to give us the confluences needed that we need to leave the market. If we hit our take profit, I'm satisfied for the day. I hope you guys enjoyed the video I've recorded. In the event that we fail the trade, I'd like to note right now at the bottom of my screen, I see green. I don't see red, which means my idea was kind of right. Kinda. Let's move on down to the hour. Because we broke structure here, right? But the hourly said something vastly different. Vastly different. Per the day on this specifically. Huge leap up. We have broke structure. And we've got a fair value gap that boosts us. There is no fair value gap in any of this except right here. And it was disrespected from that one there. So that's an inverse fair value gap. And based on this move right here, we might actually have a secondary fair value gap if the next candle forming does not come down and claim it. But even then, we have that fair value gap still. Current. Which means price is moving higher. Move down to the 5 minute. Boom. Does everything look good right here? Yes, we have not broke structure since the entry of this, which is what we want. Go to the 1 minute. This is the time frame we want to stay on because this is the one we entered on. We want to make sure that this continues higher. We don't want it to break structure out of this. We really want to see a take profit today. I want to see a take profit today. We are going to see a take profit today. I'm tired of missing out. I'm tired of losing. Here's where things get good and quickly. Okay? Fine. We've entered a trade. I am patiently going to pause the video and I'm going to wait for the end result of today's trade to occur. I hope we get somewhere with our challenge. I hope you guys are enjoying the video so far. If you are, consider subscribing. I post mostly every day. I say mostly every day. If news doesn't go our way, I will have it marked down, and I won't post for the day's news and holidays, of course, because the banks are closed. This doesn't move. It doesn't work. I can't work as a result. These videos will not be posted in those circumstances. However, if it's a normal day and news is okay, you'll see a video. You will see one, without question. I'm going to pause the video now. We will be right back momentarily. Okay? Okay. So it is now 9:33 a.m., right? We're on the 1 minute time frame. We just got through witnessing an inverse fair value gap as well as a potential break of structure here. We're waiting for next couple of candles to close. We had a disrespected I'm gonna say it differently. Disrespected zone kinda ish, sorta, right? We went up. The trade idea was correct. Let's go ahead and cut that dry right quick, right? So my thought process was, let's use the same logic we did with the first one, right? If it's disrespected, we'll go higher. Well, here is prime example. Using the same logic, not always a good idea. This was disrespected, so it should have continued higher. We have a huge leg down. And we just got through with a break of structure on the 1 minute. On the 5, we have not experienced a break of structure yet, though price is continuing down from this move specifically. 9:30 is the reaction from leg up. We have not broke structure on the 5 minutes. What about the hour? Let's see what the hour has to say. On the hour, we have not broke structure either. We technically still have a fair value gap on the hour, saying price will continue higher. We have this zone right here that we're looking at. That's got to be disrespected, right? We have another 25 minutes. This zone right here needs to be disrespected for it to continue higher and for us to claim 4, 5, 6 levels of take profit. And yes, I bunched these together because I didn't realize the 10 minute had a little bit more information to give than the others. So, looking at this now. Let's go back to the 5 minute, take a look. We didn't break structure, though we had a retrace. Price swept all this underlying low level liquidity. We should see price actually shoot way higher now. We should. We had resistance, low-level resistance across the 1 minute, which, I mean, all of this made sense, It swept it, and we should see price fly much higher. Not gonna lie, was a tad, just a smidge, just a tad bit concerned. I did not want to lose this trade. I still don't want to lose this trade. I'm a little on the protective side at the moment. Just a little bit. I'm allowed to be. I can be protective at the moment. Because that's a lot of money right there to lose, and we have not experienced the downtrodden almost, like, this is entry, it went down a little bit. And this is a completely different chart. This is the NASDAQ, not the S&P. So, I think we're okay. I think. We have a fair value gap after a break of structure occurred. I mean, that aligns with confluences pretty well. Key level hit, break of structure, fair value gap. What we'd be waiting for is price to come within either equilibrium or what's it called? An inverse fair value gap to form. And from there, price just skyrockets higher. Because it did sweep all that liquidity, the low level stuff. So we should see it continue much, much higher than what it is right now, which is a good thing. This is what we want to happen. Something I want to note as well. From the previous 3 months, right? So it's June, March, April, May, right? Those 3 months we took trades, and I have been on that challenge that TGR recommends, right? To get the confidence needed to become a definite day trader and use your actual capital. Right? You have to do demo for 3 months before you can step into live, which I completely agree with, right? We succeeded the first two and failed the last one by $8,000, almost $9,000. Big ouch. That stomped on my parade quite harshly, but it taught me a lot. It taught me a whole lot. That being said, because we failed it and we started a fresh set of 3 months, my zero changed. So before it was $100,000. That was my zero, right? And to keep track of whether or not I landed in the green or the red, I said, okay, we're not going to do $100,000, $101,000. Instead, we're going to do 100,000 minus what we made or what we lost. And essentially what I did was I said, okay, 100,000 is my zero. If I want to be successful with this, I need to have more than zero, not less. And I can't be at zero. I have to have made something from this zero. You get the point. From that note, I figured, okay, let's reset, because that is the general deal when in demo. Once you have failed it, reset your stuff to zero. So what I have done now is, I don't know if I've marked it on the notepad. Have I marked it on the notepad? I have not marked it on a notepad. This was after failing a couple trades from this, right? This, I think I changed to like 1205. I subtracted the two. I subtracted this one from this one. I changed this to positive, subtracted it from this, and then changed it to negative, and that was the result I got. Where's my calculator? Let's go ahead and just drag that up right quick. It's right here. So we have, let's see, 9503.91 subtract 8231.41. Good. This, but 127.225. That is currently what I'm at for this set of three. For this month right here, from the zero, I've lost $1,300 ish. This is where I'm sitting, right? Hello. If I got there, looks like we're about to have another break of structure back to the upside. This swept quite well, so that should actually barrel through. But you get the point. Because I reset the zero, I have to reset the trades as well. So I can't work from this amount. Instead, I have to reset to zero and then trade from zero. And that's my current progress as of June 2025. I have a small mistake to fix myself from. Once that's done and out the way, I am confident I can be positive. I can get into the positive this month. I'm confident in that. I am. I want to get very good at it to get positive. And I am working, I'm studying, I'm doing my part to figure this out. I've even made, don't take stupid trade notes. I've made 11 notes so far from losing this amount. As a result of losing that amount, I have made notes. That being the case, yeah, I mean, that's pretty much where I'm at right now. Just wanted to let y'all know so that way when I pull up the notepad and you see the random numbers and it being pass, failed, this attempt was failed, this attempt is current, right? It's not super confusing why the end result and the start result of the 2 months are different. It's demo, and I had to reset the account entirely in order to get this. Because if in real life that were to happen, right, if I were to lose my entire account, I would need to, one, work off that debt, bring it back to zero, and then some, so that way I have something in there to trade. Because you need money to buy money. You need money to buy into the market, and in order to come out of the market profitable, you need to be smart enough to know where price is going. That being the case, I decided to reset the account to zero, and from there, work with it that way. I intend to take smart trades. That is my intention. And it's going to be a while before I can safely invest thousands and thousands of dollars, which is completely fine with me. It gives me all the room in the world to actively learn. Looks as though we're continuing higher. Have we broke structure? Looks like we might be about to. We have 44, 45-ish seconds on that. Most recent high is right there. I'm actually curious. Did that should be one, yeah, that's one retrace, and then boom, we have fair value up to the 5 minute. From there, we move on to the 1 minute. We had inverse fair value gap, break of structure, move up, break of structure for confirmation on that, or an inverse fair value gap, one of the two. So that might actually retrace back down if we don't get a break of structure, which it looks like we just got one for continuation prices going higher, which works in my opinion. That actually works quite well. Oh, because I guess I didn't explain it too well. This pink zone right here, this line right here is take profit, right? And this zone is the body of the candle down to the lowest point of the wick on that candle. From this point up, that is the wick. That's from body to wick, right? This is our profitable zone. The thought process was, we put this up here, right? And we can determine, because this is our take profit zone, that one, it being disrespected, price is going to go higher, and two, if we get a break of structure within this zone and it's being respected, we can go ahead and leave market before it has anything to say. Because we disrespected it and broke structure, this is where things got a little confusing for me, because I thought, my instinct was, we broke structure. Oh no, time to leave. We went up, and I thought we broke structure, but that occurred. So that's the thing. And for going up there, that's completely fine. We have inverse fair value gap. Problem because we disrespected it twice. This says price wants to continue higher, right? So from here, we're looking, waiting patiently for one, this to be respected, wicked into, and then brought up, right? And for the break of structure to occur, and then price to continue higher. Because, pretty sure it actually just, yeah, it's working into the fair value gap now. This is an inverse fair value gap here in a second. Yeah. What's going to hurt is if we get a break of structure on the 5-minute, which that would result in this being broke out of, which that is going to hurt just a little bit. I wanted to unpause though and explain a couple things, as well as set up the rest of this and get it pretty much fine-tuned. Describe what's happening, so the next video I make, or the next time I see one of my own videos on my recommended and I watch this back, I can accurately identify this is good, this is good, this is good, this is where I need to work on, this is something I need to figure out, this right here is where I ought to leave, something like that. The sooner I can get all this down packed, the better. Regardless of sooner or later, 3 months is my goal. As soon as that's taken care of, it's just a matter of getting good with real life stuff instead of just demo. I'm glad I'm learning this now. I am. Total eclipse of that there. The fair value gap being completely inverted. Got a couple more minutes for that right there to close. The same minutes. We have a minute for that candle right here. This 5 minutes to close. Let me start the next candle. We have an inverse fair value gap on the 5-minute. Who knew one candle could hurt so much? Might be targeting that one low spot right there. Seek and destroy, I think TJR calls it. Because a lot of people see that and go, yep, it's going to go higher. And then people get stopped out from that right there. It'll target that low and then bounce off of it and continue much higher afterwards. Hello. Yep, it's 9:50. I should be looking for a trade now. Yeah, 5 minutes for this next candle to close. We just swept that one low. I said it was targeting. Hasn't gone lower than that. Doesn't look like it's going to. At the same time, want to see it close within that range. if not within, very close to. Because I know per the time frames when you scale down, it's different sized candles. So we have a margin of error so long as it closes like really close to that bottom line. Um, Once it closes, we should see the reaction to the reverse come through. Just kind of hurts to look at because we had like $5 of green. The trade idea was correct. We nailed the trade idea. Nailed it. We'd have been in the green. I think this is the scare thing. Like this is where market manipulators they target, right? And they try and like incite fear, right? The emotion to have others like retract their stuff so they can make money off of people that uh just not good, right? Um, I think we should see price continue higher after this move specifically. Because this is the retest. We had relative equal lows right there, which was strong pool of liquidity, so that makes sense right here. We had collection of lows, sweep, equal, sweep there. So that actually makes sense on the low side. It swept that. So we should see price move higher afterwards. I see them. I see them trying to manipulate stuff. They're fueling their buy orders using the sell orders at the moment. So patience is required. Every time I unpause this video, unpause videos like these, I consistently think, how much longer now? And then I realize I sound like a horror movie person. Not much longer now, and the children will be ready for eating. Some Hansel and Gretel type stuff. Did they get their names wrong? Probably. I'm referring to the gingerbread house. The two kids go in. Evil witch lady cooks them. Not good. I think we did pretty good today. And we're gonna see price come down, sweep up all this. That's not a problem. We made it pretty high too. That's like that is active fire. Very good progress made. Now we just need it to reverse in the opposite direction. Right now it's consolidating, which that's okay. I think I am gonna shave my beard, at least a little bit. Give it a trim. Hmm. Any pause video. This is like, as much as I am interested in what's happening right now, I need to pause the video. I've been recording for 2 hours. It's already gonna be a long one. Sorry. BRB. I have made a boo-boo. The idea was correct. We were stopped out. Ouch. The trade idea wound up being wrong. I am taking this very seriously. We were good. We were. You saw it, I saw it, we saw it. I was confident that price was going to go higher. It did. We saw price went higher. What was the mistake I made? How did I make such a colossal mistake? It tested its rebound. It did this twice. It tested the same level twice. The idea from this point up to this point was correct. We had $1,200 in profit. I think this is noteworthy time. What should the note be? My thought because everything about this was good. It was really good. You can't say it wasn't because we saw it together. It tested itself twice on the first take profit. So I think that's what we start with. At the first take profit level, pay attention to retest. Yeah, pay attention to retesting. It's not if. When a break of structure appears exit market. I think that's a valid note. Could we lose out on potential other gains? Yes, we could. However, we save ourselves from the potential loss. We would have been very lucky had this continued higher, and like this was lucky. This move, this one leg, that was luck that had retested that way. We didn't get a break of structure until this candle here from this leg. This break of structure should have told us price is going to go lower. When this retest happened here, we should have been keenly aware that this took precedence. And on this break of structure here, we should have left market. This bites. Between that and not waiting for the reaction. Because this occurred at like around 9:50. Where Price wanted to go happened. It occurred. It didn't appear to, it didn't present itself. It just went. Around 9:50, it just plummeted. The trade idea was correct. 85% confidence. We would have been profitable had I left. Being smart enough to leave when it retraced. Up there, up here. Even in video games, I despise, like, unless it's a game I know I'm going to lose and I have to put myself in the mode I have already lost, I despise, I actively, like, it drives me nuts to lose in such a way. When I know I'm doing all that I can and it doesn't matter because the opposition is more skillful, right? And I'm not aiming to be perfect. I'm aiming to be good enough to play a game and have fun. I'm aiming to be good enough to earn a profit without being perfect. That is my aim. I have corrected that mistake permanently now. I hope you guys enjoyed today's video. If you did, drop a like. If you're new, on the comeback, consider subscribing. I've got a long road ahead of me to get this correct. I might have to fall back on plan B if these 3 months fail. I have 3 months to get good at this, or it's to plan B. I'm going to discuss it on stream just so we're on the same page. Tune into that today. I'll be streaming from 2 all the way to 7. I'll see you then.